I'm going to bring up the next real deal because now this is something, I'm calling it the strong dollar lie. Okay, nobody ever says they want a weak dollar. Who would say that, right? Certainly, even chief executives of multinational companies that take massive haircuts in current exchange when the dollar is too strong, they don't ever come out publicly and say, we want a weak dollar. But in reality, a lot of folks want the dollar to be weaker, including investors. And you know what? Maybe the White House, too. Think about this. On Monday, there was a lot of scuttlebutt out of the G7 meeting that President Obama said that the strong dollar is the problem. That came from a French official. Of course, the White House has denied this. But since then, the dollar has been tumbling. And I got to tell you, it even looks more vulnerable here. Now, Wall Street loves the slumping dollar, but will it continue? And if that is the case, will it continue to help this market? Now, we know, obviously, today, some of the leaders in the market were IBM was up like $3, Caterpillar, some of these names that are multinational we talked about, but also old school industrial names.
Yes, ITT.
Is that going to continue? Do we need
yes,
but is it all about the dollar in that?
It's not all about the dollar. It's about liquidity. And the answer is yes, we are going to see this trend continue because we have liquidity in the market. The time to be fearful or be concerned is when liquidity starts to dry up. But it's not right now. We have liquidity, and everyone knows that the Fed is going to tighten. As a matter of fact, the 10-year yield hit just about 2.5% today, and that's really important. That says that we're telling the Fed what they're going to do. That's great news. That's already pricing itself in. So the answer is yes, we're going higher with these big cap names because there's money sloshing around to go into them and that wants to be part of them.
In the big picture, if you look at the U.S. dollar index over the last 20 years, we're kind of in the median. We're not at it. We're much higher than we were a couple years ago because the U.S. dollar was in a downtrend for about a decade. So we're off those lows. Right. So if you look in the grand scheme of things, I think we're absolutely fine with where it is. But I can understand why Obama wants it because it increases exports. His goal from a year into his administration, he came out and said, we're going to double our exports under my watch, and that's how you do it.
We would have a manufacturing miracle. But we must admit, though, the last couple of earnings periods, guys, a lot of these companies missed, and almost and the chorus was strong dollar. Paul?
And that's happening. I've been saying for months on this program that we're not going to see a rise in the Fed rates until 2016. Now you have the president coming out talking down the dollar. You have the World Bank came out today saying don't raise rates till 2016. The IMF did the same thing last week.
I thought they were the same organization.
No, they're different. And it's a coordinated effort. This didn't happen by accident. They're sending a signal to the markets that the Fed is not going to raise rates till 2016 because if they do raise rates, guess what happens? Stronger dollar.
Do you think that it was a slip of the tongue or that they, to your point, if it was orchestrated, it helps a lot to have the president accidentally say that?
It was orchestrated. You can't have every major global financial institution saying the same thing without it being orchestrated.
So I'm a believer a little bit different than you. I think the U.S. economy is going to grow a little bit faster than everyone's expecting in 2015.
Give me a number.
The second half. I think we're going to grow the second half roughly about a 3 handle.
Okay.
And then next year around 3% as well. That will force the Fed to start raising rates. Now, I'm not talking about a massive rate increase, but I am talking about a deliberate rate increase. So the U.S. dollar, we believe, is going to be stronger than the euro as well as the yen as quantitative easing within Bank of BOJ, the Bank of Japan, as well as the ECB continues to kick in. It's in their best interest to devalue their currencies, and they will try.
China overnight.
That's going to bring money back into the U.S. and make the dollar even stronger. Nobody wants that.
No, the United States doesn't want that.
Right.
But the ECB and the Eurozone do because they want to gin up their inflation rate. Just because the United States...
They want money to move to the United States? That's not going to do that.
Let's be very careful. What we're saying here, okay, is that the ECB is looking to devalue the euro. And they're going to try in an aggressive fashion to do that. And as you start to see the U.S. economy kick in and the Eurozone GDP not grow at 3%, but perhaps a 1 handle, that's going to put pressure
They've been
on
doing
the
that already for last year.
Well, not only that, though, I think with respect to expectations, I think a 1 handle for Europe would be seen as a greater victory maybe than 3% for America.
Yeah.
I mean, with respect to expectations. But, Lauren, I want to bring you into this. All right, overnight, China, they they changed their GDP numbers again. What I thought was interesting with China, they sharply lowered their inflation outlook. And you still have this argument about deflation around the rest of the world and whether or not we have a molt and we're impervious to that. Certainly, anybody who's buying eggs, which has an asterisk because of bird flu, but anybody who goes to the supermarket they make sure I get the emails and tweets. Charlie is obviously haven't been to the supermarket lately to say there's no inflation in America, but I'm kind of with Paul. I think this was orchestrated to a certain degree. I think the idea is that we want to get these profits up. And I think to Matt's point, I think we want this manufacturing miracle to kick in sometime before the terms are over. But to Chad's point, it's just not our decision. I mean, everyone's playing a race to the bottom. All these countries.
Yeah, well, I think the weak dollar immediately makes us think of a negative thing, but it's not necessarily a negative thing, like Matt said.
But no one will ever come out and say, I want a weak dollar.
No, yeah, you can't come out and say it, of course not, but it will help exports. It's definitely going to help tourism. I can see that on the streets of New York City as I'm trying to get here today. So there are positives to having the weak dollar.
All right. Well, net.
See, I don't know if I buy that because we do import a lot of stuff too. So the weaker dollar, it costs us more to import goods into our country. So I think we have to walk a very fine line when you say that, because I think and security-wise, as far as the country is concerned, I want a strong dollar.
But from an investor's point of view, you want a weaker dollar.
Right. So I'm walking a fine line there, Charles.
Right. That's right. That's right. That's making the dollar coming off a bit of from those highs has just helped us the last few days, including today.